Hello, welcome back to Stock Market in 5 minutes. Today we are going to see the journey of a company from its initial establishment to the IPO listing. How the companies are established. If you want to start a factory, you will take a loan from the bank and make a product and sell it under the license of a company. What's the disadvantage here? If you make a profit, you will pay the principal amount and the interest to the bank. What if you can't make any profit? Even though you need to pay both interest and principal amount. The security or mortgage assets which against which you have taken the loan will be sold and recovered by the bank. Even sometimes banks also face a difficulty in selling the assets when the company goes for bankrupt. For a Kingfisher, where all the flights are grounded, they cannot sell any flights. So that legal battle leads to accumulation of such assets. They are called as non-performing assets. If you don't want to take loan from the bank and start a business, what is the alternate? You make partners. Partners are called as shareholders or stakeholders. They will bear and they will enjoy both profit and loss with the company. If larger shareholders without any managing posts are called as promoters. Investors who stay invested for a specific period of time, they are called as anchor investors. This is what is a private company has been established, in which people are invested and the company is running. When you want to involve the public, then you have to offer it to the public. And the first time when you are offering to the public is called as initial public offer, where you are going to give the company shares publicly in the stock exchanges. So till this it is called as a private company or private enterprises. When a company wants to expand, when the company will go for IPO, when the company wants to expand its business but not confident enough to take bank loan, the such company will go for IPO. Or else, when over a period of time promoters feel that they made enough of profit by investing in this such company, they want to take an exit. When they don't find any buyer, they will go for a public. Usually nowadays promoters exit is the IPO they are coming out. Believe me, more than 80% are promoter exit way for this IPO. Such company IPOs are not profitable than the company which are taking loan or coming for IPO for the business expansion. There is something called as, before presenting to the public, they will present it to the SEBI. What is their product? What is their company? The share price, share amount. This is presented to the SEBI before presenting to the investors. Okay. In this, recently SEBI has made some changes. There is something called anchor investors who are investing major chunk as a public. They need to be remain invested for minimum 1 year. Promoter can't have more than 65% stake in the company. They have to explain the rationale for IPO price. That is called as draft red herring prospectus. Once it is established, once SEBI approves, Then they will go for the listing. IPO allotment. After allotment, there will be listing in NSE, BSE. Then what is ADR and GDR? ADR is American Depository Receipts. GDR, Global Depository Receipts. These are not actually shares. These are receipts against the bunch of a share or a lot of a share. Then what is SGX Nifty? Indian Nifty NSE is trading is called as CNX Nifty. The same index has been listed in the Singapore Exchange Stock Exchange is called as Singapore Stock Exchange Nifty or SGX Nifty. Thank you.